week's Middle East and Africa Forum for Sustainability Leaders podcast, where we take a deeper dive in this massive push towards sustainability that we're seeing across the region, trying to uncover intelligence and insights for our stakeholders to help them navigate the journey ahead. Today, we're lucky to be joined by our special guest speaker, Nick Green, Senior Manager Policy at Abu Dhabi Global Market. Thank you, Nick, for joining the show.
Pleasure to be here.
Nick, before we jump into things, I just want to get your overall perspective on the role that AGGM plays, of course, in this massive sustainable finance place, and then, of course, the role that you play in navigating the pathway forward in that segment.
Sure, and maybe just to introduce ADGM to those who don't know it well enough already. So it's Abu Dhabi Global Market. We are a financial free zone within Abu Dhabi, of course, the UAE. We were launched in 2015 as a business and financial center within the UAE. So essentially what the center is a place to do business for investors and those managing money to meet. And within ADGM, we have the Financial Services Regulatory Authority. So we are, seek out to be a world-class financial services regulator. I am a policy operative within the FSRA. And so what we're really seeking to do here, my role in particular, is to build a regulatory framework that will facilitate that doing the business. And where this really hits the kind of climate area is a couple of ways, but we're becoming a real fund manager, a center of fund management. I mean, we brand ourselves as the capital of capital, some of the largest sovereign wealth funds in the world. You have very large global names setting up from the hedge fund and traditional fund management world. And they are setting up investment vehicles which are investing in the transition to net zero. So one of the ways in which we are focusing our efforts is to facilitate that effort for fund managers to direct the capital they're raising into economic activities that will make net zero a reality. It's not the only way, and I can go through some of the other ways that we're seeking to do that. But I think big picture, it's a financial and business center. We're the regulator here. We can help ensure that capital is directed towards sort of sustainable projects and activities.
Just a follow-up question on that, because sustainability is constantly evolving. Of course, these standards and metrics are different from country to region to globally, et cetera. Where do you start when you want to try to build and enhance that regulatory framework? What's the starting point, the thought process that goes through that, and then the pathway that you see forward in creating that environment that is, I would say, most enabling for sustainability to push forward?
Yeah, sure. So there's so much to regulation of sustainable finance you have to prioritize. We published our first iteration of a framework for sustainable finance in July early this year. And we prioritized, but we were also quite broad as well. So the way that regulators think about sustainable finance regulation is that you can regulate the greening of finance. So you can try and make the entities within your jurisdiction more green themselves. So you can use the influence of the regulator you have to make banks and other commercial entities just more green or move along their path to net zero. But you could also facilitate the financing of green activities. And that's something that we've also focused on. So you could argue that we've prioritized but tried to do a lot of things at the same time. In terms of greening finance, we published our first requirements for ESG disclosures. We also created a regulatory framework for environmental instruments such as carbon offsets, carbon emissions, sort of bring that within the regulatory framework. that's seeking to either nudge the entities within our jurisdiction to become more green, or help them become more green by enabling them to offset emissions using a sort of trusted regulated party. In our case, it's the Air Carbon Exchange. On the other side, our sort of prioritization has, as I sort of think mentioned earlier, is focused on the fund management world. So we identified that we needed more investor trust in funds which are seeking to invest in the transition. So we created a regulatory framework for what we call green funds, which invest in green assets, or climate transition funds, which invest in assets which are greening. They're not green yet, and the capital is being made available in order to help them to become green. We also have a framework for bonds and green bonds and portfolios. But I mean, in order to kind of not ramble on too much, you'll kind of see that our focus has been really on those areas.
How has the private sector reception been to that next step in that regulatory environment? Has it been receptive, being adopted, a part of that let's say solution that's being created, or is it kind of also the chicken and egg where you're helping them move along as well? Is it a mix of both, or what has the reception been?
So we went to consultation on the framework in this time last year, and the reception was actually excellent from stakeholders. Our framework was much celebrated, and one could kind of might be surprised that a lot of stakeholders were actually asking for more steps, more regulation in certain areas. And we certainly responded by making our framework sort of even more strict following that consultation in terms of a finalization of it. And furthermore, they actually asked, and they're asking for further iterations to the framework as we go forward. So it's surprising in a good way that the financial sector and just beyond the commercial sector has actually been more than receptive, celebrated this. I think the other element to your question is to what extent there already exists a sort of critical mass of, for example, product providers which are creating sort of green funds and climate transition funds. We're already seeing that. So whether we're seeing fund managers establish an ADGM with a strong strategy of investing in transition, or we have funds which are already established here, which are looking to be part of our framework. We are seeing that. So I've been on numerous calls over the last 5 months since we published our framework with a look to sort of bring in already established parties into our framework. We're still early on. I mean, this between now and 2050, it's
a journey. Yeah,
it's a journey, and it has to be the priority. Because there's an existential risk of not meeting net zero. So the ball has only started rolling, but the momentum has been great, and I expect great things to develop.
Just on that private sector point, we had a conversation with a big regional bank based in the UAE, and of course 4 speakers as well who were in the financial sector last week. And the idea that a lot of the funding that goes into projects right now is coming from the public sector. Of course, there's a difference between bankable projects and transparency and creating that environment. From your perspective, what needs to be done in order to drive, I would say, larger private sector participation in the financing aspect for sustainable finance and sustainable projects? What do you think are the next steps and where you see things going?
Okay, so that's a huge question. So I'm going to try and give you a sort of somewhat succinct answer.
If you have the answer, it's like winning the lottery, essentially.
Exactly. So I mean, it's been estimated by McKinsey that the gap between the capital allocated to net zero and what's required at the moment is something like $4 trillion per year. So it's a dizzying figure. And the kind of source of the gap likely varies region by region. But I will give you the best answer that I can within the context of the question. So it's true that a lot of money is required to come from the public sector, likely often due to the nature of the assets required to make net zero reality. Insofar as energy structure, what you tend to have is, in many cases, a lot of energy to be initially funded by government. Now, that's always not the case, obviously, and it doesn't always have to be the case. I'll give you a good example. In the UK, the Green Investment Bank was set up to use capital from the government to invest in offshore wind. It was then privatized, and that may well be a good model for some other jurisdictions in a way to sort of animate their investment in energy infrastructure. It doesn't have to be the model. And I think, for example, in the UAE, you have two examples of great renewable energy companies, Mazda and Taka, which are making great strides in building the energy transition. That being said, there is likely, in any sort of market failure, as we can call this, this big, there's likely a failure not just on the supply side, but also on the demand side. So there's likely a failure in demand from either institutional investors or sort of mass investors. And that is one of the reasons why we have addressed in our regulatory framework what we see as the need to enhance or engender investor trust. The logic is the more that you get funds out there, or sort of mass investor products, which are trusted by investors and which are seeking to invest in the transition, the more capital that's going to be allocated from the private sector. The gap, this green financing gap, is too big. It's just too big to be addressed by government alone. So we need to address every single point of the sort of market failure in this, and the private sector absolutely does have a role to play.
What's the first step in establishing that trust? You know, we also in our conversation last week talked about, you know, transparency and leveraging that as a unique steps to establish that trust amongst all stakeholders.
What we have done is to remove subjectivity and to a degree of discretion from the fund manager side, or from the sort of, we could call it the financial intermediary, because it doesn't just apply to fund managers, regarding what is a green asset and what is a climate transition asset. And it's not to be sort of overly critical of how things have developed up to now, but we wouldn't have developed this framework unless we identified that sort of, in the way that financial intermediaries have presented their sort of green projects up to now, baked into that has been sort of a lack of transparency, potentially too much discretion and subjectivity on behalf of the financial intermediary about what constitutes green. So we've just removed that. For example, in the case of a green fund, an ADGM green fund, if it wants to obtain a designation as a green fund, it has to invest in a very specific list of assets. So, for example, assets which are aligned with a green taxonomy. And then where it's not a mass market, or where it is a mass market, or sort of a sort of mass product or retail product, you have to get a third party to look at the portfolio and provide assurance that that's actually what you've done with the money. So there's that element of just removing the discretion. With climate transition funds, it's effectively the same kind of framework. It's specific kinds of assets which we have identified enable companies to transition to net zero. I'll give you an example: a green bond, which is issued with a second party opinion and with ongoing assurance about what those proceeds are being used for. So removing discretion and subjectivity about what we're talking about is kind of absolutely key in the first step to that. I think that a lot of this is about momentum. So at the moment, you probably hear the phrase greenwashing said a little bit too much. It's a personal opinion, and it's not scientific.
Well, the definition keeps changing all the time, right? Yeah, depending on the situation.
Exactly. So it's a bit of an unscientific statement. It's a hypothesis, and the counter to that is the risk that people are not investing in the transition because they assume that all things are greenwashing because it's such an easy claim to make. So what we're trying to do in our regulatory framework is essentially put the level of discussion at a product which is calling itself green or climate transition, its discretion is removed in terms of what is constituted as green or climate transition, and that should make a really important impact.
A big part of this too is one, talent, ensuring the ecosystem has the right talent that filters into this, and communication to ensure that ecosystem thrives, essentially. And many of the stakeholders, it's kind of along a spectrum of the journey. Some are starting at A, some are closer to Z. Where do you see that we're currently at in terms of having the right talent in the sustainable finance space that understands what we're discussing, and of course will take advantage of it and contribute? Are we there yet, or we still have to work on that to attract that talent? And then the second question is, how do we communicate what we're discussing to a wider stakeholder group, essentially to establish buy-in at a higher level?
Right. So one thing I'd say to this is talent is contagious. So whilst we're globally, I think globally there's always a supply and demand problem for talent. We're certainly steps and steps above where we were even 10 years ago, and certainly 20 years ago. So I'm not pessimistic on the talent side at all. In fact, I think that this is something that's growing now regionally. I'm also not I'm quite the opposite to pessimistic. I'm hugely optimistic. I think that bringing COP here was a fantastic decision for a number of reasons. One is that it allows the UAE to demonstrate to a lot of times very unreasonably pessimistic or skeptical global audience the really excellent work that is being done in this country to foster the transition. I say that as someone who's been here almost 4 years, it's central to this country's plans to diversify over the long term and ensure it's essentially strategic and economic well-being over the long term. But also COP built a huge momentum in this country. I have colleagues who were previously working on sustainable finance in ADGM who are now seconded to COP. Essentially, the contagion of I'm not sure where the contagion is worth, the sharing of best practice in terms of sustainability and knowledge around that is palpable. So this is going to have a huge impact on this country, but not only this country. It's about the Gulf and wider region. So that's that question addressed. I think your kind of second point was a bit more about the broader stakeholder engagement and understanding of this point. So on this, I think we need to get to a happy place in the world of sustainable finance where stakeholders achieve the kind of level of education that is required to have in order to be able to discern between what is a potentially greenwashing product or service and what is one that is sort of fulfilling best practice. Our role as regulators is to try and help them never have to make that choice. But I think we need to just be a little bit realistic because it's just like the world of any financial services in which the choice is ultimately at the consumer. We shouldn't expect sort of 8 billion-ish people in the world to obtain expert level status regarding sustainability generally and analysis of sustainable finance products specifically. And I think what efforts like IOSCO, and so the International Organization of Securities Bodies, are seeking to do in terms of dissipating investor knowledge about these terms is sort of exactly what we need on this. As a regulator, I would say that ultimately our role as regulators is to try and make sure that that happy place that I was speaking about earlier doesn't require too much work on behalf of the investor. Don't expect them to get up to the master's level in sustainable finance in order to be able to read a product fact sheet and work out whether this is greenwashing or not.
Yeah, I imagine that masters in sustainable finance will constantly keep changing each year as well, as the industry is constantly evolving too. There's one aspect too, as well, that comes into that equation. It's not just for the financial services industry, the finance sector, but this is kind of for all sectors who are going through this transformation. Is of course we're talking about benefiting people and planet, but there's also profit. How do you see that coming into the equation and being a selling point moving forward? Sustainability isn't always a short-term, ROI investment, for example. It might be a part of a longer-term strategy. Where does profit come into that equation, and how do you think stakeholders should approach that concept?
I don't necessarily see the contradiction that a lot of peers see in the issue, and maybe I'm just missing something big, but I'll give you an example. I mean, the UK Green Investment Bank, which invested in offshore wind, I mean, there was a sum of money put up by the UK into energy infrastructure. It was an immensely profitable venture and went out to the market as a profitable venture, which is why the market invested in it, took it off. So things like energy infrastructure, particularly where you have government pricing flaws on them, unless I'm misunderstanding this fundamentally, this is not an area where you see a huge amount of losses made. Utility companies are in a good way, often boring and counter-cyclical companies. So the actual concept of the profit motive is not in contradiction to getting to net zero. I mean, there's more examples, which is just that the growth prospects for ESG or green funds are just seen as the growth area in fund and asset management, particularly as we move away. Well, let's put it this way: there's price pressure to move away from active management to passive management. So you know, those funds are being managed at a profit by those asset managers, and there's no contradiction there between the sustainability objectives of the end investor and the profit objectives of the fund manager, sort of at face value. Where the problems come in are primarily in this concept that green outcomes are being sold, but are not have a low, zero to low likelihood of being delivered. That is ultimately, and again, conflict of interest. I am a regulator, so I would say regulation is key, but that is ultimately why we as regulators see our role as important, because we're here to try and take away that potential conflict and subjectivity. I think I mentioned earlier on behalf of a financial intermediary about what is considered green. And then finally, importantly, enforce where we see sort of bad practice being undertaken.
And so, of course, implementation is always the hardest phase of anything. You know, you have the vision, you have the targets, and then you really roll up your sleeves to get that action done and the implementation phase of things going. 20 minutes goes by pretty fast. I actually think we're at 25 minutes now. I just wanted to get final comments from you. Of course, COP28, we've been talking about it for so long, and it's now upon us, I believe, just starting in a week's time. What are your hopes and expectations from outcomes from COP28 at that event in terms of climate action? Obviously, this is just a blimp and a long journey ahead. But what are you looking for in terms of outcomes that would come from the conference?
Yeah, so COP this year will be, my prediction is that COP this year will be big in terms of ambition and outcomes. And the reason why I have that prediction is, having lived and worked in the UAE for almost 4 years, this is a country with a huge energy around it. It's kind of a youthful country with a lot of ambitions, a lot of energy, and the substance to back that up. So I hope that what comes out of COP will move the dial materially in terms of something equating to being able to have a pathway to closing that green financing gap that I mentioned earlier. And then that will be across private sector, public sector, what's known as concessional finance, so sort of not strictly for profit based financing. And that includes on things like the loss and damage fund. If you will allow me to focus it in on ADGM for just a second,
go ahead.
I will say we published our Sustainable Finance Regulatory Framework in July this year, sort of in good time for COP. I think what will happen as a result of next week's Finance Week here in Abu Dhabi and the following week's COP is that we are really going to move the dial forward in terms of making the ADGM a premier center of sustainable finance in terms of the products and services that it hosts that are there to channel money into the transition to net zero, but also the commitments of the companies based in this international financial center to themselves become more green and to become net zero companies. So those are my hopes, dreams, and ambitions.
Well, thank you, Nick. We very much appreciate your time and your insight shared today. For all those who are listening and watching this podcast, please feel free to follow Nick on social media as well as ADGM, of course, leading the way in this space for the region and globally as well. And then, of course, Gulf Intelligence, where we'll be publishing this content. But thank you very much, Nick. We appreciate your time, and we look forward to having you back on the series again in the future on the other side of COP28.
Thanks so much, Brian.